Welcome to a discussion on this topic, which is leases. Friends, in the previous section we talked about remeasurement of lease term and purchase option concept. What we would now like to do is discuss one scenario where we try to calculate the revised liability due to a change in the lease term, right? What we have done is we have taken some calculation in front of us. I would like to explain that to you, but then there is some background to those calculations. It says that there is a company which has got into a lease of 10 years. That's the original lease term, okay? And the discount rate at the inception, so we may use at the inception, that is given as 6%. There is a payment, there's a fixed payment of 100,000 per annum made at the end of each year. Okay, so that is something which is provided to us, right? Effectively, if this had this worked the same way, we are saying that annually there are payments being made of 100,000 each, and taking the discount rate of 6%, we have achieved these many values, the sum total of which is 736012. Okay, ignoring everything. So if I look at purely the lease liability part of it, so I'm not talking about the right of use asset, but what I'm saying is the lease liability at inception comes to 736012. So effectively what I'm saying is my opening balance of the liability is 736012. All right, I would be charging, of course, on this an interest at the rate of 6%. So the opening balance, when I take this calculation, 736012 into 6%, that gives me around 44161. But I've made a payment of 100,000 towards the year end. That gives me a closing balance of 736012 plus 44161 minus 100,000. So what we have is the calculation coming at 680,173. So very quickly I want to run through this calculation. So this becomes my opening balance, and then what I'm doing is I'm just doing these calculations further. 40810 this becomes, so I can use this number 680, and this becomes 620983. This becomes 680983, and I'm taking an 6%. So I'm doing these calculations very quickly now, and we'll do the accounting part of it as well. Okay. So 100,000 gone. I have, so this was 620, so just a carry forward issue. So I have 620983 to 6%. That this calculation is done okay. This comes to 558241. All right, let's do it for a few more years. 558241, and I take 6% of that as well. That comes to 33495. This gives me 491,736. Okay, so now what I'm doing is basically say that at this point in time, at the end of year 4, the lessee right, wishes to, so at the end of year 4, lessee wishes to extend the lease by another 2 years. Okay, and at this point in time, the interest rate is, let us say, coming at, let's use a number 7% here. Okay, right? So far we have got this amount as a liability, 491,736, and now we are saying that the revised term remaining is 5, 6, 7, 8, 9, 10, and then we also have 11 and 12. So there are 8 years now remaining. Okay, as against the original period of, original term remaining was 6 years. All right, so what we are saying now, we are saying safely that at this point in time we need to remeasure the lease liability. Okay, we need to remeasure the lease liability using revised discount rate. Okay, so the whole objective of using the revised discount rate is to bring into perspective as if you are getting into a new lease and getting away with the earlier lease now. Well, that's not exactly true, because you are in a way modifying the lease, not creating a new lease arrangement independent of the previous one. But here we are saying that the revised discount rate measures the lease liability, and accordingly the accounting shall be done in that manner. Okay, so when I say that, I'm looking at remeasured liability. Precisely what we need to do is could have used that number again, but nonetheless doesn't matter. So what we are saying now is, here I have my existing liability, which is 491,736. Okay, and then what I need to consider is my revised liability shall be taken at, so I have 8 years left, 1, 2, 3, 4, 5, 6, 7, 8. I'm paying again 100,000 per annum. And I would discount these cash flows at the revised rate, that is 7%. So when I were to do that, I'm simply saying this will be, let's say, 93458. This will be 87344. This will be 81630. The next figure is 76290. This one is 71299. The next one is 66634, followed by 62275, and finally 58201. So when I do the additions of all these numbers, very quickly I have this stands at 518521. Okay, so when I've got this amount in front of me, 518521, and my existing liability is 491736, what we do now is we reassess this liability as an additional liability. This is likely to arise when the scope of lease is increased, for example. Okay, we'll discuss that separately. What happens in case the scope of lease has gone down? But here precisely we are saying that my new liability, which is 518521, reduced by the current liability, which is 491736, I'm getting a value of 26785. So this differential, this delta, is accounted for as an increase in my right of use asset and a corresponding, of course, increase also into my lease liability. Okay, so precisely what we are saying is, when there is a reassessment of lease term and purchase option, and within that, when the scope is increasing, for example, we would remeasure or reassess the lease liability using the revised discount rates. Okay, so this is the chart that follows. Of course, using a spreadsheet or an Excel sheet is not going to take any time at all when you do these calculations. Quite a straightforward process. But having said that, very quickly we would like to at least mention now, although we don't discuss it here, that under what circumstances under what circumstances lease liability is remeasured. Okay, the very precise answer to this question is that as and when there is a change in the cash flows, all right, as and when there is a change in the cash flows, my lease liability shall be remeasured, and this is of course going to change my right of use assets value also. So if I were to really quote those instances, I'm saying any change in lease term is going to change my or remeasure my lease liabilities. Okay, when you assess the assessment of, for example, whether the lessee is reasonably certain in assessment of whether the lessee is reasonably certain to exercise the purchase option. Okay, right? Then we are saying that changes in estimates of residual value guarantee. Okay, right? We may say, for example, a change in substance fixed lease payments or changes in lease payments due to changes in index or other variables. Okay, right? So when I say other variables, precisely I mean to say interest rates. All right, so what we would want to do now is carry forward this discussion to the next point, where we want to understand what happens when these changes come and whether we use original or revised discount rates here. Sounds a bit okay? Yeah, so that is something which we are going to continue with our discussion on within the subject leases. So that's it from my side again on this subject. Good luck with your preparation and have a good day. Bye. Thank you.